Everybody, this is Jim at SP500chart.com. It's Sunday morning on April 5th, 2020. We're getting ready to take a look at the chart as it ended for the week ending April 3rd. And we'll do so after I remind you that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. As a matter of fact, I'm not even an unlicensed financial professional. So there you go. Let's take a look. Starting out here looking at a weekly chart. There's our weekly candle. You can see that we traded in a range that was on average much higher than the past 2 weeks. We had just like 1, 2, 3, 4 weeks of just horrendous downward. Actually, 4 solid weeks of bad action in the markets. Then we had a week before last a nice green recovery obviously not a recovery because we didn't recover what we lost, but we had a nice green reactive rally. Then this past week we're down a bit again. The scary part is, if you look at this chart, I'll just be frank with you. If you look at this line of resistance right here, line of support that has now possibly been turned into a line of resistance, you'll see we have back tested that line the past 2 weeks and could not get over it. There you see the top of that candle right there, touch that line exactly. This past week, top of that candle touched that line exactly. So if you look at that, you would say, well, the wheels are getting ready to come off the S&P and the broader markets once again. But here's the interesting thing, and this is what I'm struggling with a little bit, getting my head around this. Typically, when you have a major market top, it takes place when things are good. And it takes place because the reason you get the top is because everybody goes all in. And at that point, there is absolutely no physical way the markets can absorb any more money because there's no more money to be absorbed. So there's money, but you know what I'm saying, that the markets have taken such a big breath of cash in that they have to exhale. Normally, when you're in a bull run, you're just kind of breathing. Let me tell you a real quick story. I was not a good swimmer, and my problem was this. I never learned really a good controlled breath. I would swim a lap of a pool doing the freestyle, and I would roll my head to the right, and I would breathe in, and then I would put my head underwater, and I didn't like the sensation of that water maybe getting up my nose, so I would breathe out through my mouth, but I would take in a breath of let's say I would breathe in a quart of air, and then I would breathe out 2/3 of a quart, and then I would breathe in a quart, and then I would breathe out 2/3 of a quart, and by the time I got about 2/3 way down the lap of the pool, there was absolutely no way I could take in any more air, and I would have to stop and just go, just let all the air out of my lungs because I was not breathing controlled. I would take in so much air that at some point there was no more air that could be taken in, and I would just have to stop and let out this big breath. That's usually what happens at a market top. The market breathes in, but doesn't breathe out quite as much. Breathes in, doesn't get that. That's why it keeps going higher. And then finally, you get to the top of it, and it's like there's no more breath left. There's no more room. There's no more. I mean, the analogy isn't perfect because with me, the limiting factor was my lungs, but with the market, the limiting factor is the air. It just can't take in anymore because there's no more to be had. So that's usually what forms a market top. In this particular case, we were actually in a very bullish situation where the markets were flashing signals that we are ready, after having exhaled a good bit in this inverted head and shoulders pattern, we're ready to move up. But instead, what happens? We get the news of the coronavirus, and this has forced a lot of money out of the markets, but it has not done so because of the absolute need for that money to be forced. It's done so because people are scared of the coronavirus. As they say, bull markets climb a wall of worry. This is a huge worry event. And because of that, I'm just a little slow to say that this is an unrecoverable position. Because at some point in the next week to week and a half, in all probability, we are going to reach the peak of the number of new daily coronavirus cases. And the people who model the disease and the people who do the charts and everything, these people are going to show that. And when that happens, my guess is we will see a big, big rally. Now, of course, that is predicated upon the idea that indeed we see that top in the coronavirus. And that should sort of confirm the bottom in the markets. So there you have it. So there's that line. We got underneath it. But here's another reason why I'm thinking maybe this isn't quite as bad as I'm thinking it could be. Because what have we done? There's where we hit that line of support that broke previous week. Here we hit it exactly again. And what did we see? Well, this past week on Wednesday, we saw a little descending wedge. Okay, that means selling pressures petering out. Instead of slamming us down to 2200, into the upper 2100s 2 weeks ago, instead now we're seeing a little bit more controlled selling. And with the rest of the week, it looks like possibly, we need to see a little bit more, but it looks like the past week and a few days may be itself in a descending wedge. If that's the case, even though I don't like the term and I don't like the pattern, but if that's the case, indeed, we could be seeing something of what someone would call a cup and handle. Couple things before we do that. Obviously, we have to break out over this line here. And if we break out over this line, the projection would be, if indeed this continues to form as a descending wedge, then we should be coming back up to about 2650. And at that point, if we get a little bit of good news, and it seems to line up with where we might start seeing that we are near the peak of coronavirus infections, at that point, maybe people see the handwriting on the wall and people pile back into this market. Obviously, no guarantee of that, because this does look scary. The fact that we broke this line and now we've tried twice to get over it and we couldn't do it. But I'll remind you that both of those attempts to get over that line came at a time when nobody really knows how many people are going to be affected by COVID-19. So anyway, this past week, we obviously on the 30th and the 31st, we rallied up to that line. We gapped down pretty big on Wednesday, and then we went sideways for the rest of the week. This is a line of support that actually goes back a ways. I don't know how important it is, but you see it's drawn over the two bottoms back in late February and pretty early March. I can maybe refine that line a little bit. Well, actually, if I really get it just right, we didn't really get much under that. I think that line must have shifted on me a little bit. So we got over this in the previous week, back tested it, looks like now a second back test. And all of that to say this looks like it could be, no guarantees, but this looks like it could be foretelling another rally back up to 2650. And if we can break out over that, then I think a target back over 3,000 and getting us back into this pink area here is a distinct possibility. Now, is that 3840 target going to come back alive? Well, I wouldn't say that. I wouldn't say anything about that. Well, I'll be honest with you, this has pretty much busted that pattern, but we might look for another pattern at some point if we're able to mount a significant rally and get back up to around 33,000, 3,100, something like that. You can see also that everything in this coronavirus scare has the shape of a descending broadening pattern. And we know that these broadening patterns, they're indicative of panic, of just emotional panic. What do we know about emotional panic? Let me make one more case that maybe the bull market is not over. By the way, I know that the media defines a bear market as any time the markets lose 20% or more. I don't buy that business because I just don't think. I think that's just a simple way of looking at it. I don't think it really means it's a bear market. You can lose 20% and then turn right around and you're back in the bear market a month or two later. But anyway, to make a long story short, we know that emotional panic often happens near bottoms, doesn't happen near tops. So this is an emotional freak-out mode, a bit of trading that we've seen over the past about 6 weeks. So for this week, let's see what happens in relation to this line right here. Let's see if we continue to move between. Let's call it this gray. I'll tell you what. I'll change the color of these. I'll make that green. Let's see if we continue to move inside these green lines, and if we do, if we're able to do what it should do, and that is break out to the upside and then head back for 2650 as a minimum target. If we break through 2650, then I think we start to head back up into this pink zone up here. So that's about it, guys. You could throw a couple other little short-term lines on here. You could go here to there, and you could say, well, that's a little evidence here, but that's really sort of again trying to predict ripples in a riptide. So I'm not gonna. I think that'd be folly to try to make too much sense of that. So that's it. There you have it. We had a week where we finished down for the week, but it still seems to make some sense that we would do that. Excuse me. I got allergies like crazy. It's not coronavirus. So anyway, hey, thanks for taking time out of your weekend to watch this. And as always, thanks for your very kind support. Take care.